Hello and welcome to Rozar's Investments. Before I start today, I'd like to say thank you for subscribing. I've gotten so many new subscribers in the last 30 days that it's just amazing to me. So this week we have earnings week coming up. We have Apple, Square, and Tesla. Those are the three of the hundreds of companies that I'll be focusing on in this video because I don't own them myself. A friend of mine owns them, but they are three companies that are very, very interesting to me. And I might actually bet on Square and Tesla going down a little bit. I was watching CNBC earlier today on a pre-recorded show, and I got some good ideas for this. So I just want to show you guys. First, I got the Apple chart up here. These two red lines are what's called a moving average envelope. It's a 100-day moving average, which if you were to take the middle point of these two lines, it would be the average price of the stock over the last 100 days. So you can kind of think of these two lines as when the stock is a little bit too high or a little bit too low. So in Apple's case, this is a one-year chart, and we can see that Apple over the year is trending upward. Although it does have its very up months and its very down months. As in September, September 25th, it was very down, had a low of 149. Over here in early February, it had a low of, what did it have a low of? 150. And over here in April, had a low of 160. So yeah, Apple seems to go way down every few months. So the reason why I'm bringing up this company is because they're reporting earnings on Tuesday. I have a little cheat sheet here on the bottom left if you want to take a look. So Apple's reporting Tuesday. They're expected to report $2.18, which is much more than they earned a year ago. So if Apple goes up or down, it's going to be for a number of reasons. One reason is going to be if it makes or misses that number, $2.18. Another reason would be if whatever analysts expect Apple to make in revenue, if they beat the revenue estimates or miss the revenue estimates. Another thing is iPhone sales and also forward guidance on iPhone sales, forward guidance on earnings and revenue estimates. So while I don't have any concerns about Apple per se, I do have some concerns about the stock market overall. As we've seen last week, Facebook dropped 20%. Twitter dropped like 20%. So companies are taking huge hits. Netflix dropped, what was it, like 15%, in the 15% range. Netflix dropped like $50 a share. Facebook dropped like $45 a share. So companies have taken some ridiculous drops. And while I don't really have any concerns about Apple, if we look at this chart over here in the top right, it is kind of on the high side. I mean, you know, if it goes up, it might go up a couple of dollars a share. And, you know, people might be happy and shareholders might be happy. But if it goes down and investors don't like something about the report, I can imagine this dropping. See my mouse over here at the 190 all the way in the top right? It could drop all the way from the 190 range all the way down to like 180 or 175. I mean, Apple has taken some big drops, 3 huge drops this year so far. Actually, 4 if you count March and April. So yeah, these huge drops are not rare, and it just seems like at this relatively high point in Apple's life, it can go up a little bit, but if it does go down dramatically, I don't think you want to take that risk right now. So if you're a long-term shareholder, maybe just close your eyes and don't worry about it. But if you are into options, you can do some things to protect yourselves, like buy a put, buy a call spread. I mean, sell a call spread. You know, things like that. There's some stuff to think about. So, you know, this is just my opinion. I'm just a guy. I don't, you know, I don't own Apple myself. I don't work for Apple. I don't have any insider information on this. I'm just kind of telling you what I see in the charts. So next we will go to Square. Let's take a look. Pull it up on the chart here. All right, now I didn't change this moving average envelope. This is still 5% above the average and 5% below the average. But as you can see for Square, it doesn't necessarily, you know, touch these lines all that often. You know, usually it's above 5% above its moving average. So Square is definitely one of those stocks that is up, 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 up in the last year. So Square is one stock. While I think it is a fantastic company, My daughter owns shares of PayPal. A friend of mine owns shares of Square. But I don't really have too much interest in Square myself, other than from a curiosity standpoint. I might buy a put spread because Square is looking kind of pricey. Right now, it's about $70 a share, which is definitely on the high side. So a company like this, you got to remember, it's a great, great company. They sell those card readers. So, small businesses can accept credit cards. A wonderful company. This is another company run by Jack Dorsey, the guy that runs Twitter. And it's an absolutely wonderful company. And, the challenge is, when can you actually get in to buy shares? Because at every point in its life, it's always so high. But as you can see in this chart, in November, it took a big drop. Over here, January going to February, the whole market dropped that week. That was starting at January 26th, I believe. And over here in March, took another big drop. Let's see, April took a big drop, and in June, it took a big drop. Now, right now, it's higher than all of those points when it dropped previously. Square is a company that is valued based on its future potential, not on its earnings right now. If you can look at my cheat sheet over here to the bottom left, they're reporting Tuesday. They're expected to report only 12 cents. So that is more than they reported a year ago of 7 cents. But still, these are very, very, very small numbers for a company that's worth many billions of dollars. I think it was a $28 billion market cap. So Square is very, very pricey right now. This is for the riskier investors among us. This is not for a 65-year-old grandmother that's nearing retirement. This is more for the people that are, new adults, 40-year-olds, 30-year-olds, 20-year-olds, that have a long time to invest and can definitely take the risk. So Square, it has taken these $10, $15 pullbacks very frequently throughout the year. And again, they're reporting earnings on Tuesday, and who knows what's going to happen. I'm not saying I don't like the company. I love the company. But is the risk reward really there? If this comes out with great earnings, think about this. That's what they're supposed to do. But if they come out with bad earnings, the stock could drop. I could definitely imagine this dropping all the way down to this the upper end of the moving average envelope. Right here, it's $59. As you can see, it hit that in December. It hit it again in February, hit it again in April, hit it again in May. It just seems a little bit too pricey right now, and it's not worth the risk. So I might even go so far as to say it is overpriced right now. It might be overpriced right now. At least for the next couple months, until it gets back down to about the $60 range. So I might end up buying a put spread from like 70 to 60, where I will get max value from that put spread if Square goes down to $60. So I'm considering that. I'm not saying I'm guaranteed to do it, but it's just one of the things I'm thinking about. So now let's move on and go to Tesla, which is reporting earnings on Wednesday. So Tesla, again, I don't own this. My daughter does not own any shares of this. Friends of mine do own small amounts of Tesla, but I really don't care what Tesla does. I'm just kind of looking at the charts. Now, Tesla is a company that is losing money. So before we look at the chart, if we look at the left over here, reporting Wednesday, analysts are expecting negative $2.81 per share. Now, I don't really care what analysts think, but as a whole, markets tend to pay attention to what analysts think because we have, it's kind of a benchmark to go by. So they're expected to earn a negative number. So let's say they earn negative 250. That would be better than what analysts expect at negative 281. So Tesla is a company that there's all kinds of stuff going on in the news. So as you can see, the overall trend of Tesla is going down over the last year. Although the chart is very hard to read because it's super high, then it's super low, then it's super high, then it's super low, then it's super high, and it looks like it's kind of going down to that super low moment again. It hit in the 270s a whole bunch of times this year so far. So I see no reason why this can't go to the 270s again. So some things that are in the news is, if you guys watched that movie, The Big Short, remember that guy that Steve Carell, the actor, played? I think his name is Steve Eisman, if I remember right. I'm not even sure. I think I have the name wrong, but yeah, the reports came out Friday that he's the guy that bet on the housing market going down. Very, very smart guy. And basically, he came out publicly and said that he was shorting Tesla because he thinks that they are burning through cash and they are basically super duper overvalued. Also, their bonds are they're not highly rated bonds. I'm not too into bonds. I know there's like AAA, AA, single A, triple B, double B, single B. Their bonds are not of the status that you would call it super secure. Um, and I think if I remember correctly, that bank said that they have a reasonable chance of defaulting sometime in their next few years, defaulting on their debt. And a lot of people have come out and said that Tesla is absolutely going to need to raise money, even though Elon Musk said that the company will not need to raise money. So I know that they do make money on every car that they sell, but because they have so many other investments going on, the company as a whole is losing money. So yeah, I would not feel comfortable with Tesla going into this earnings report. As again, I said if you look at the bottom left, it's $297. They're reporting on Wednesday. And I mean, what kind of news are they going to come out with that's going to make this stock pop? And I think just from a common sense perspective, not even from a trading perspective, I mean, it does look like it's in a downtrend over the last month or month and a half, but not even from a trading perspective, just more of a common sense. It does seem like there is a better chance of hearing bad news of production delays or issues with them building cars in the tents or anything along those lines. A better chance of hearing the bad news than the good news. I mean, what kind of good news are we going to hear? That they're producing 5,000 cars a week? Like that? Like, is the good news going to be that they're doing what they're supposed to be doing? I don't know if that really counts as good news. And for such a high-priced stock, this is over a $50 billion company. So I just feel like from a risk reward perspective, there's not too much reward to be had. I mean, this could jump up from 300 to, I mean, yeah, from about 297 to 320, 330, 340, who knows. But on the downside, I mean, Netflix took a tumble, Facebook took a tumble, Twitter took a tumble. I mean, do we really want to take that risk? So if I was going to trade this, I would probably also be buying a put spread, probably from about, I would say from about 320 to about 280. That'd probably be my sweet spot there. I'm less likely to be doing a trade on Tesla, more likely be doing a trade on Square. But yeah, these are three super exciting companies that are reporting this week, so I wanted to kind of draw your attention to these. And again, thanks for watching these videos. I'm new at making this. Definitely tell me if I can improve on anything. I'm basically just making videos on what I'm interested in, and I hope that you guys are interested too and kind of learn something from this. Also, this is the software that I'm using, OBS software, which is amazing and has a cool look right here. So guys, thanks for watching, thanks for subscribing, and I will see you next time.